Right, hi everyone. Welcome to today's live analysis session brought to you by IC Markets. Right, trust you all had a great weekend, catching up with family and friends. And before we begin today's webinar, right, just let's please take note of the disclaimer. Right, take note that this is marketing communication and does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for the transactions in financial instruments. Also, take note of the risk warning that comes with trading forex and CFDs as they carry a high level of risk to your capital, and you should only trade with money you can afford to lose. My name is Ketan Rameshchandra, and this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. Right, so before we dive into the charts and trading view, let's take a look what's on the economic calendar for this week. There's quite a few things going on, but I want to bring your attention towards the consumer inflation in Australia and US GDP and the PCE price index. Right, so here's the calendar for this week. Right, we've got, as I mentioned, we've got quite a few things going on. We also have Germany's I4 business climate being released earlier today at 9 a.m. GMT time, and tomorrow we've also got the home price index for the US and a consumer confidence survey by the conference board. And then on Wednesday, 26th of February at 12:30 a.m. GMT time, the monthly CPI indicator for Australia will be released on this date. And then on Thursday, we have GDP data for the USA, that's at 1:30 p.m. GMT time. And on Friday, we've got, not only do we have preliminary CPI data from Germany, we also have Canadian GDP, and we have the PCE price index as well for the US. Remember, the PCE price index is the Federal Reserve's preferred gauge of inflation, and that's going to be closely watched as well. And that drops on Friday, 28th at 1:30 p.m. GMT. Right, hi Jamali, good to see you as well. Right, so taking a slightly closer look at Australian CPI or consumer inflation, right, we can see that the monthly indicator, after dropping as low as 2.1% in September and October of last year, has accelerated over the last couple of months, rising as high as 2.5% in December. Now, the forecast for January points to a third successive month of higher prices, with the monthly CPI indicator expected to hit 2.6%. Now, part of this reason is we've also seen energy prices increase over the last couple of months, as well as looking at Australia specifically, right? The impact of government energy rebates have started to wane as well, right? And this is going to put upward pressure on energy prices. So it's quite likely we're going to see January's monthly CPI indicator accelerate once more, right? It could even come in higher than the forecast of 2.6%, right? So should we see inflationary pressures accelerating once more in Australia, this CPI result is likely to trigger further demand for the Aussie. All right, and we can expect strong tailwinds for this currency pair. So take note, monthly CPI indicator for Australia drops on Wednesday, 26th of February, and that's at 12:30 a.m. GMT time. Now, looking at US GDP, the preliminary GDP data drops on Thursday, the 27th at 1:30 p.m. This follows the advance estimate, right? Over the last couple of months, right? I believe about last 6 to 8 weeks ago, the advance estimate showed GDP growing at a quarterly rate of 2.3%, which is the chart here on the right. So you can see here for the fourth quarter of 2024, the advanced estimate showed economic activity in the US expanding 2.3% at a quarterly rate. And the final, or not the final, sorry, the preliminary estimate now points to an unchanged figure as well. We can see here, after notching a small expansion of 1.6% in the first quarter of 2024, we saw economic activity rebound very strongly in the second and third quarter of last year. And now the fourth quarter is showing pretty decent expansion as well, but at a slightly slower rate. And when you look at it on an annualized basis, we can see that after expanding strongly in the second half of 2023, right, with economic activity growing more than 3%, right, at an annual rate here, we can see it's starting to taper off quite slightly, right? But nevertheless, right, economic activity is still strong in the US, it's still pretty robust, and we are likely to see the preliminary result match the forecast as well. So we could see a nice demand for the US dollar in the second half of the week, especially if the PCE price index also comes in hot. Remember, the PCE price index is the personal consumption expenditures index, and this gauge is closely monitored by the Federal Reserve as it is their preferred gauge of inflation. Now, when we look at the two charts here, on the left I have the chart for headline PCE, and on the right I have the chart for the core reading, the core index. We can see that the headline index has accelerated over the last 3 months, right? After moderating as low as 2.1% in September of last year, headline PCE has accelerated to as high as 2.6% in December. Meanwhile, the core reading has remained relatively unchanged at 2.8%. However, we can see both metrics are well away from the Fed's target of 2%, right? So if we see a combination of strong GDP output, plus we see PCE or we see inflationary pressures continue to push higher, as seen in the PCE price index, this is likely to trigger a pretty strong demand for the US dollar as we approach the tail end of the week. So take note of that as well. All right, hi, Trading Musk, good to see you as well. All right, thanks for tuning in. And of course, once again, right now, as we begin the analysis, right, we'll move on over to the charts on TradingView. We'll start off with the dollar index, make our way through a couple of the major currency pairs, the indices, crypto, and the commodities. And of course, should you have any other requests, please do drop them in the chat box here. Right, okay, definitely we'll be covering the euro as well, and we can touch on euro yen as well. All right, great to see all the requests coming in. So let's kick things off by looking at the dollar index, right? This is the chart for dollar index on a daily time frame. Let's quickly look at it on a weekly time frame, and we can see here, right, demand for the US dollar has tapered off quite significantly since mid-January, right? After hitting a high of 110.17 in mid-January, this index has dropped as low as 106.20 today, right? From peak to trough. From peak to trough, this index has lost almost 3.7%, right? It's lost almost 3.7%, and we can see that this downtrend is extending as well, right? Coming back to the daily time frame, right? Coming back to the daily time frame for the dollar index, we can see very clearly since beginning of February as well, we can see this index trading in a prolonged downtrend. We can clearly identify a series of lower highs and lower lows, right? It's pretty there's probably a nice bearish channel currently being developed, but at the same time, take note of this descending trend line. This descending trend line has been in place since mid-February, right? And it could restrict any retracement to the upside as well. So after stabilizing at around 106.46 last Friday, the dollar index pushed higher to close at 106.64. It opened at around the same level. However, we saw this index drop as low as 106.12, but it looks to have recovered so far, right? So we could see the dollar index probably retrace a little bit higher, but take note, this descending trend line that we see here is going to be pretty critical as well. If the dollar index can break above this descending trend line, we could potentially see it reach this pivot. The pivot is actually an overlap resistance. Okay, the pivot is actually an overlap resistance, and that's at 107.49. Why is this an overlap resistance? When we can see a swing high being formed here on 25th of November, and after the bullish breakout took place on 18th December, this level has functioned as support multiple times, right? We can see it here on 20th of December, 6th of January, over here as well at the end of January this year, right? Of course, this part here on the 27th, we can see the dollar index actually breaking below this support, but generally we can see this level has held up pretty well in most instances, especially here on 30th of January, and then again in the first week of February as well. So this creates a very nice overlap, which we can use in the identification of the pivot. That's at 107.49, and this overlap resistance is also accompanied by a Fibonacci retracement at 38.2%. Now this retracement level was found by running a retracement from this swing high here on 3rd of February and ending with the swing low of today. Right, we can see that the 38.2% retracement aligns very well with the overlap resistance, which is the pivot, and that level sits at 107.49. Beyond that, right, there's a nice swing high resistance that was formed here on Tuesday on the 4th of February, right, and this level here is also accompanied by a Fibonacci retracement at 61.8%. Now, beyond the pivot, right, where the first support, right, the first support lies at 105.44. This is an overlap support that's accompanied by Fibonacci retracement at 50%. You can see the 50% retracement was found, running from this swing low here on the 27th of September and ending with the swing high here on Monday, 13th of January. And it sits just below the overlap support, right? Previously, this level at 105.44 functioned as resistance in the first week of November, and after the bullish breakout took place in mid-November, this level proceeded to function as support not once but twice, right? It's almost like a nice double bottom here that was formed on 29th of November, then again on 6th of December. This then creates this reaction here, this double bounce here, then creates a nice overlap level, which we can use in the identification of the first support. Not only is the overlap support accompanied by this 50% Fibonacci retracement, right? It is also accompanied by Fibonacci extension at 161%. This extension level was found by running a retracement from this swing low here on 27th of Jan, going up to the swing high on the 3rd of February. So take note, right? These are the key levels for the dollar index on the daily time frame. It's been in a prolonged downtrend since the beginning of February. We can clearly see a series of lower highs, lower lows, and at the same time, when we zoom in here, we can see that this descending trend line has kept prices to the upside as well. It has restricted any upward retracement so far. However, if it does break above this descending trend line, we can then expect this index to reach the pivot, right, which is an overlap resistance that's accompanied by a Fibonacci retracement at 38.2%. Should it break above the descending trend line and reach this pivot level once more, this is why I think the dollar index once again stall and reverse to drop lower. Right, and also do remember to smash the like button as well on YouTube, right? Do remember to smash the like button as well. Would truly appreciate it. All right, so these are the key levels for the dollar index. Let's move on over to the euro. Then we'll touch on euro yen, and then we can touch on the Aussie as well, right? Since we've got CPI data for Australia dropping on Wednesday. So let's start off with the euro first, then euro yen, and come back to the Aussie. Now looking at the euro, we can see that since Monday, 10th of February, right, it has climbed higher, it has climbed steadily higher, but it looks to have run into resistance a couple of times at around 1.0530, right? When we look at this level here, 105.20, this level has functioned as resistance since the 24th of January, right? And and last Friday, the euro closed at around 104.55, but it gapped higher today to open at around 1.0470, racing as high as 1.0532. Now this jump in the euro follows the elections that took place in Germany on Sunday, which was yesterday, right? So that's on 23rd of February, right? I think the election results should be more or less confirmed, right? And I think that's a strong coalition being formed by the Social Union, I believe, two parties, and this has sort of generated a more positive outcome following the uncertainty heading into the election. So this positive outcome or sentiment brought about from the recent elections has created strong demand for the major currencies in the euro, particularly the euro currency itself, the British pound, and the Swiss franc as well, right? So we've seen the euro initially raise strongly today, right? Raise strongly higher towards 1.0530, but it looks to have stalled and pulled back, right? As it's pulling back, right? I see a nice overlap support at 104.02. We can see that previously this level here functioned as resistance in the first week of February, and then last Wednesday specifically, we see it bouncing off this level, making a nice swing low here, thus creating a very nice overlap support at 1.0402, which we have identified as the pivot. Now, with the euro currently pulling back as well, we can also run a Fibonacci retracement from this swing low here on 10th of February, going up to the high of today. And when we look at all the Fibonacci retracements, right, we can see the 50% retracement accompanies the overlap support at 1.0402 very nicely. Remember, the overlap support is the pivot. Beyond that, there's a nice swing low that was formed. Right, there's a nice swing low that was formed here on 10th of February, and that level sits at 1.0293. Now, should we see the euro pull back all the way towards the pivot, I think this is where we can identify a nice opportunity to go long on this currency pair. So we're looking for potential bullish bounce. For the euro, off its pivot here, which is the overlap support that's accompanied by Fibonacci retracement at 50%. And if that bullish bounce does materialize, right, we can identify this intermediate resistance at 1.0520 as the first take profit target. And of course, if this currency pair continues to climb even higher, right, I see a nice multi-swing high resistance at 1.0601, which we can identify as the second take profit target. Now we can see the euro running the resistance at this level not once but twice, right? First here on 19th of November of last year, and then again second time here on 29th of November, and the third instance on the 6th of December. So very clearly a strong resistance barrier here that's accompanied by a 38.2% Fibonacci retracement, as well as a Fibonacci extension at 127%. So how did we find the 38.2% retracement? This retracement level was found starting from this swing high on the 25th of September and ending with the swing low here on the 13th of January. And the Fibonacci extension at 137% was found by running a retracement starting from this swing high on the 27th of Jan and going down to the swing low here on the 3rd of February. Right, so you can see here there's a pretty strong resistance barrier that's also accompanied by a Fibonacci retracement and a Fibonacci extension. Right, so take note, the euro is currently pulling back. I see a nice overlap support at 1.0402, which has been identified as the pivot. This overlap support is also accompanied by a Fibonacci retracement of 50%. So should we see the euro pull back all the way towards the pivot, this is where I think it could stabilize and reverse to bounce higher. And should that bullish bounce materialize, right, we can identify the first take profit target at 1.0521. Right, this is a resistance barrier here, or multi-swing high resistance that has been in place since 24th of Jan. And of course, if this currency pair can continue to rise even higher, we'll be targeting the first resistance at 1.0601 as the next potential take profit target. Remember, this is a resistance barrier that's accompanied by a Fibonacci retracement at 38.2%, as well as the Fibonacci extension at 127%. Alright, now let's move on over to the Euro Yen, and then we'll touch on the Aussie. Right, looking at Euro Yen, the Euro Yen has stabilized at a very significant swing low. Right, this is a multi-swing low support that has been in place since Friday 13th of September 2024. Right, we can see the first swing low, of course, taking place here back in September 2024, the second swing low taking place in the first week of December, and the third swing low taking place as recently as 10th of February. And of course, we saw the Euro Yen stabilize around this significant support level last Friday as well, and it looks to be retracing higher today. It looks to have found the floor today, right, and looks to be rebounding a little bit higher. Right, so very clearly the pivot level for Euro Yen is at 155.99, pretty much at 156. It is a multi-swing low support, a very significant multi-swing low support that has been in place since Friday 13th of September last year, right? Very significant support level here. Now beyond this multi-swing low support at 156, the next support for the euro comes in at around, I would say, more inclined to use here, this level here, another multi-swing low support at 153, and we can see the first swing low taking place here on 28th of July 2023, and the second swing low taking place here on 7th of December 2023. So another very significant multi-swing low support, which we have identified as the first support here. Now coming back to where the Euro Yen is trading, right, we've also run a Fibonacci projection as well, and let's make this a little bit more clearer. And we can see the Fibonacci projection starting at 0.1 on 24th of Jan, going down to 0.2 on the 10th of February, and ending at 0.3, which is on the 13th. So we can see the 61.8% projection sitting very well with the pivot, which is the multi-swing low support. 78.6 is in no man's land, but we can see 100% sitting very close to the first support. So for the projections, we're only going to be keeping 61.8% and 100%. And not only is the first support accompanied by a Fibonacci projection at 100%, it's also accompanied by a Fibonacci extension at 161%. Now, how did we find this extension level? And we found this extension level by running a retracement. By running a retracement from this swing low here on 10th of February and ending with the swing high on the 13th. And we can see that we have a Fibonacci confluence, right? That sits close to the first support. Now, Fibonacci confluence simply means you have more than one Fibonacci level at a particular price zone, right? So in this case, we have the Fibonacci projection at 100% and the Fibonacci extension at 161%. All of these functioning as additional supporting arguments in the strength of this support level here. All right, so we are expecting a rebound, right? A minor rebound for the euro yen, right? This is the pivot is a multi-swing low support that has been in place since Monday, 16th of September last year, right? And it once again looks to have provided a nice floor for the euro yen. So we can probably expect this currency pair to retrace a little bit higher and probably reach close to the first resistance. Okay, I'm not so inclined to use the first resistance at this level here, but actually I see a nice pullback resistance at around 158.55, right? So should we see any bullish bounce materialized, I think the euro yen is likely to run into resistance at this pullback resistance at 158.55. Now, we're also going to run a Fibonacci retracement starting from this swing high here on 24th of Jan, going down to the swing low on the 10th of February. Looking at all the fibs, we can see that the 38.2% retracement aligns pretty well with the first resistance, which is a pullback resistance. And let's just keep 38.2% and highlight this as a zone over here. Right. So what we've seen is the euro yen stabilizing stabilizing at around a significant multi-swing low support, which is the pivot. It's also accompanied by Fibonacci projection at 61.8%. So we're expecting this currency pair to make a slight rebound, and this rebound is likely to stall at the pullback resistance that's accompanied by Fibonacci retracement at 38.2%, and that level sits at 158.55. Right, there's also another retracement that we can run as well, starting from this swing high here on the 13th of February, going down to the low of last Friday. And when we look at the 50% retracement, we can see that it sits very well with the first resistance. So the first resistance at 158.55 is a pullback resistance that's accompanied by not one, but two Fibonacci retracements. So take note, looking for a potential bullish bounce for the euro yen, and we can target close to the first resistance, which is at around 158.50 as a potential take profit target for this currency pair. All right. Trading Mas, I hope that's answered your questions with regards to the euro and euro yen. Let's come back to the Aussie, right? As we've got CPI consumer inflation data dropping on Wednesday. All right, appreciate it. Thanks so much, Trading Mas. All right, okay, so coming back to the Aussie, right, we can see here after making a significant swing low at the beginning of February at around 60.90, this currency pair has rebounded quite strongly, right, from trough to peak, which was basically last Friday's, the high of last Friday. This currency pair has gained well over 5%, gaining more than 300 pips over this period as well. So very strong rebound for the Aussie since the beginning of February. And this uptrend looks to be intact as well, right? It looks to be firmly in place, right? We can see a nice ascending trend line, right? We can also identify a nice ascending trend line that's been in place since the second week of February. And as markets reopen today, the Aussie stabilized at slightly above the ascending trend line and raised higher, to climb pretty close to 64 cents, right? It stalled just around 63.95, right? Stalling just underneath this level here is pulling back a little bit, but I think the upward momentum is still in place for the Aussie. So should we see this currency pair pull back towards the pivot, which is at 63.13, this is where I think it could stabilize before reversing to resume the uptrend. So the pivot is a pullback support level, right? This level previously was a swing high resistance that was formed on 24th of January, and then when the bullish breakout took place in mid-February, this level is likely to function as a pullback support. It's also accompanied by a Fibonacci retracement at 23.6%, and we also have the ascending trend line. So the 23.6% retracement was found starting from this swing low on 3rd of February and ending with the swing high of last Friday. So we have three factors contributing to the identification of a strong support zone. We have the ascending trend line, we have the 23.6% Fibonacci retracement, and we have the pivot, which is a pullback support. All right, thanks so much for the kind words, Trading Marks. Must truly appreciate it. Right, okay, so we're looking for potential bullish bounce for the Aussie. And remember, we are expected to see the monthly CPI indicator highlight higher prices once more for the month of January, I believe, if I remember correctly. Is it January? Yep, also, yeah, for January, right, we've seen the monthly CPI indicator accelerate since October, right? We've seen 2 consecutive months of higher prices, and it's very likely we're going to see a third consecutive month of upward pressure in January. So inflationary pressures are likely to push the Aussie higher, right? It's likely to push the Aussie higher on Wednesday. So in the meantime, if we do see the Aussie stabilize at this intersection that's being identified by the pivot, the 23.6% Fibonacci retracement and the ascending trend line, right? It can help us identify a potential buy opportunity or long opportunity for this currency pair. And we have a fundamental catalyst as well, which is potentially higher inflationary pressures in Australia that could drive this currency pair higher. So if it does uh, make a nice rebound of the pivot, right, we can identify several take profit targets, right? We can identify the first take profit target at 64 cents, right, at pretty much 64.04. This is where the Aussie has run into resistance last week. And beyond that, we can identify the second take profit target at 64.48, which is an overlap resistance. Right, it's a nice overlap resistance that has been in place since 9th of December. Right, let's see if there's any Fibonacci retracements that we can use on this downtrend, right? There's a prolonged downtrend that had begun from 30th of September till 3rd of February. Let's take a look, starting from this swing high on 7th of November, going down to the swing low here on the 3rd of February. Let's take a look at all the fibs, right? We can see the 61.8% Fibonacci retracement aligning very well with the overlap resistance at 64.54, which is the first resistance. Now, we can also run a second Fibonacci retracement starting from this swing high on the 30th of September, going down to the swing low again to the 3rd of February, looking at all the fibs. In this case here, actually we can see the 38.2 retracement sitting pretty well with last week's resistance. So let's just keep the 38% here as well. Right, so looking for potential pullback for the Aussie, and if you can stabilize at around the region of the pivot at around 63.10, it can help us identify buy opportunity for this currency pair, looking for potential bullish bounce. And especially if Wednesday's CPI data comes in hot, we have a fundamental catalyst that could push this currency pair higher. All right, so that's what we've got for the Aussie. Let's see any other requests. Otherwise, let's move on to the commodities, right? Let's move on to the commodities. Looking at gold, right? Looking at XAU USD is the ticker symbol for spot gold, and we can see, right, this instrument has recorded its latest all-time high, intraday all-time high last Thursday, 20th of February, as spot prices hit $2,953.32 per ounce, and it still remains elevated. It's hovering around. This precious metal continues to remain elevated, and we can see that it's been trading in a strong uptrend since 18th of December. Right, we can see clearly trading in a prolonged uptrend. And at the same time, we can also identify a very significant ascending trend line, right? It's a very significant ascending trend line that's been in place since 7th of January. Now, looking for a pullback, right? If I were to identify a pullback opportunity for gold, it would be at this intersection that's being highlighted by the ascending trend line, the pivot, and the 23.6% Fibonacci retracement, right? We can see that the pivot is actually a pullback support level. It's almost like an overlap support, right? We see resistance being formed here on 5th of February, 5th and 6th of February. And we see a nice bounce taking place here on the 12th. This creates a very nice overlap support. We also have the intersection of the ascending trend line. And we have the 23.6% Fibonacci retracement. This retracement was found starting from this swing low here on the 18th of December, ending with the intraday all-time high last Thursday. And we can see that the 23.6% retracement aligns very well with the overlap support, which is the pivot. So looking for potential pullback, right? If you do see a pretty deep pullback for spot gold, I think this is where we can identify a better opportunity to go long on this precious metal. Okay, then beyond the pivot, there's a pullback support at $2,790 per ounce. This level previously functioned as a swing high resistance at the end of October last year, and then resistance once more on 24th of Jan before breaking higher. So this creates a very nice pullback support that's accompanied by a 38.2% Fibonacci retracement. Let me see if that's the 50% that maybe sits a little bit closer. Let's take a look. No, 50 is probably, oh, I think 50 looks a little bit better. I'll explain why in just a bit. Yeah, 50% retracement does look a little bit better here. Yep, there we go. Right, it sort of creates like an overlap zone between this swing high resistance on the 31st of October and this swing high here on the 24th of Jan. Creates a nice overlap level. Right, so let's get rid of the annotations here. Right, and in terms of resistance, right, spot gold is trading close to a resistance barrier that's identified by a Fibonacci extension at 161% and a Fibonacci projection at 100%. So the extension was found by running a retracement from this swing high on 31st of October, going down to the swing low on the 14th of November. And we can see the extension at 161% sits at $2,946 per ounce, very close to the intraday all-time high. And the Fibonacci projection at 100% was found by running from 0.1, 6th of February, going up to 0.2 the 11th, and ending at 0.3, which is on the 12th. Right, so you can see here, this is how the first resistance barrier has been identified for spot gold, and it looks to be pushing higher as well. Today, gold prices did pull back slightly, dropping as low as $2,922 per ounce. However, it did not reach the pivot level here, right? So perhaps I would not like to chase this rally in gold, right? I would prefer to see a nice pullback materialize, especially since this ascending trend line has been respected quite strongly. Perhaps there's another ascending trend line that I would highlight as well on a daily, right? There's another nice ascending trend line is here, over here. So perhaps this ascending trend line is something that's tracking prices a little bit closer, can be used as a potential identification for a pullback to see prices bounce higher. But the main support that I see for gold is the intersection between this ascending trend line that's been in place since 6th of January, the overlap support at $2,867, which is the pivot, and the 23.6% Fibonacci retracement. This here highlights a very significant support zone for gold. So should we see a much deeper correction or pullback materialize over the next few days, and this is where I will identify a nice buy opportunity for gold for a slightly longer outlook. However, right, there's a second ascending trend line that I would like to highlight as well. So should we see prices pull back towards this second ascending trend line, but this is somewhere we should track as well, and this is where we can identify probably a more shorter term opportunity to go long for gold. All right, so that's spot gold. Let's move on over to crude oil. Right, XTI USD is the instrument that tracks WTI crude oil futures, and we can see that since 15th of January, this commodity has been in a prolonged downtrend, right? From peak to trough, which is today's low, we've seen XTI USD drop more than 13.5%, right? It's a huge move over the last 4 to 5 weeks, right? Big drop in crude oil prices, right? We can clearly see a series of lower highs and lower lows. Perhaps there's even a bearish channel that we could identify, right? Yeah, there's a pretty decent bearish channel that we can identify. We can see several touches to the lower trend line of the channel and a couple of touches here last week on the upper trend line as well. It's a pretty decent bearish channel that we can identify, and today crude prices looks to have stabilized at around the 78.6% Fibonacci retracement. This is also close to a swing low support that was formed over Christmas last year. So this swing low support at $69.62 per barrel is accompanied by a Fibonacci retracement at 78.6%, and it looks to be a zone where crude prices has stabilized as well. So as crude prices were falling sharply last Friday, right? I would have identified this support zone as a potential take profit target for any short trade that you may have that you may have had for crude oil, and this is where it looks like prices have indeed stabilized. Right, so it's important to identify key support areas because they are going to be used in identification of potential take profit targets for any short trades. Now, we see crude prices stabilizing and it could retrace a little bit higher over the next couple of days. However, I would take note of the bearish channel, and should it reach the upper trend line of the bearish channel once more, this is where I think it could once again stall and perhaps reverse to drop lower. So take note, any retracement to the upside for XTI USD, right? This is the instrument that tracks the WTI crude oil futures. Any retracement towards the upper trend line of the bearish channel is where I think this commodity is likely to stall once again, helping us identify a potential bearish reversal to resume the downtrend. And if that bearish reversal does materialize, remember, take note, this support zone that's identified by the pivot and the 78.6% Fibonacci retracement is where we would identify a potential take profit target for any short trades that you may have for crude oil. Now, beyond the pivot, right, which is a swing low support at $69.62, the next major support comes in at $66.66. This is a very significant multi-swing low support that has been in place since 10th of September 2024. We can even argue here on 1st of October, crude oil prices bouncing off this support level, and then again here on the 29th of October, and very clearly here on 18th of November, as well as in the first week of December, right? Very significant multi-swing low support at $66.66. Right, so we are seeing crude prices retrace a little bit higher, right? And I think and should it reach the upper trend line of the bearish channel, this is where I think prices could once again stall and reverse to drop lower. Alright, so these are the key levels here for XTI USD on the daily time frame. Take note, this is the instrument that tracks the WTI crude oil futures, right? We've covered the commodities. Let's move on over to indices. Let's start with the DAX. Right, DE40 is the instrument that tracks the DAX futures. Right, as the DAX was pulling back sharply last week, right, I had identified a nice pullback support at 21,877. This is a nice pullback support that's accompanied by Fibonacci retracement at 38.2%. This is where I was expecting the DAX to drop and stabilize, but it looks to have gapped higher today, right? We can see that after closing at 22,177 last Friday, right? This index gapped higher to open at 2,281, racing as high as 22,494, right? Today's high as well, right? You can see here the positive sentiment echoing from the outcome of the German elections, right, has boosted the euro and boosted the German stock index as well. Right, so remember the DAX is the one of the main indices for Germany, stock exchanges for Germany, and it has made a nice rebound today as well. Right, I was hoping for a much deeper pullback, right, because I think this is a nice support level. Maybe looks to have found support at around the 23.6%. Yep, there we go. It does look to have found support at the 23.6% Fibonacci retracement last Friday, capping higher today following the positive outcome of the elections. And I think this index is likely to raise higher, right? I don't think we're going to see this pullback take place, perhaps, at least not today, right? Not towards the pivot, at least not today. But should we see the DAX remain elevated, I think where we can identify a nice potential take profit target is the swing high resistance that was formed last Tuesday, 18th of February, right? It is close to the intraday all-time high. Right, the intraday all-time high for the DAX was formed on Wednesday, 19th of February, and that level sits at 2,937 and 80, 2,937.80. Beyond the pivot, which is the pullback support that's accompanied by a Fibonacci retracement at 38.2%, there's also a multi-swing low that was formed at the end of January, and at the beginning of February, that level sits at 21,293. This is also a multi-swing low support that's accompanied by not one, but two Fibonacci retracements. The 38.2 retracement level was found starting from this swing low here on 19th of November, going up to the intraday all-time high on 19th of February, and the 50% retracement was found by running starting from this swing low on 20th of December and ending at the intraday high once again. Right, so these are the key levels here for the DAX or the 40 on the daily time frame, right, after gapping higher today. it looks to be remain elevated, and I think it could make a nice push towards the intraday all-time high once again this week. Although the deeper pullback towards the pivot has not materialized, but of course, should we see price reverse, maybe perhaps in the second half of the week, right, and it reaches this level, this is where we can probably identify a nice opportunity to go long on the DAX, a much better opportunity to go long on the DAX of the pivot here. And of course, this index continues to trade above the green Ichimoku cloud, which highlights the ongoing bullish momentum. All right, now let's switch over to US 500. Right, similarly for US 500, it made its latest intraday all-time high last Wednesday, 19th of February, and the level sits at 6,147.60. Right, latest intraday all-time high. And the US stock markets were spooked last Friday, 21st of February, as a new range of trade tariffs were announced by the White House. And also we saw Walmart release its latest earnings report, which showed, which was a pretty poor report, right? So earnings and revenue were pretty. I think it missed most of the expectations, if I'm not mistaken. Let's take a quick look. Take a quick look at Walmart. Right, let's see. It released its when did it release? Yep, it released its earnings on Thursday, 20th of February. That was dragging the market down last Thursday and Friday. Let me see. Okay, so earnings and revenue actually beat expectations, right? Beat the respective forecasts. However, I think it was the forward guidance, if I remember correctly now, it was the forward guidance for the subsequent quarter, which proved to be pretty bleak, and that caused a sharp sell-off. So you can see how, despite recording positive earnings surprise and revenue surprise, like EPS and revenue surprise to the upside. However, it was the forward guidance that has dragged down the share price of this company, as well as the broader market as well. Okay, now coming back to US 500. Coming back to US 500, we can see that after closing at 6,012 last Friday, this index has gapped higher to open at 6,022, racing as high as 6,050 today so far. So I think this retracement to the upside is likely to gain further traction. Once again, right after the sharp pullback last Friday, I was expecting this index to drop towards its pivot at 5,937. This pivot is a multi-swing low that has been in place since 27th of January, and is also accompanied by not one but two Fibonacci retracements. We have the 61.8% retracement and the 23.6% retracement. 23.6% retracement was found on this prolonged uptrend that's starting from 5th of August, swing low on 5th of August, and ending with an intraday all-time high on 19th of February. And the 61.8% retracement was found starting from this swing low here, a much more recent one, on 13th of January, ending with the intraday all-time high. So the pivot is a multi-swing low support that's accompanied by not one but two Fibonacci retracement levels. I was hoping for a much deeper pullback last Friday, right, as the indices close tumble quite strongly. I'm expecting it to I'm expecting this downward fall to continue today as well, dropping towards the pivot. But for now, it looks to have stabilized at around 6,020 and looks to be racing higher. But however, should we see the US 500 drop towards the pivot at 5,937, I think, and it should be stabilized around this level, I think this is where we can identify a much better buying opportunity for the US 500 on a slightly medium-term outlook. Right, and beyond the pivot, which is a multi-swing low support at 5,937, there's another multi-swing low support at 5,818. Right, we can see the first swing low being formed here on 23rd of December last year over Christmas, and then the more recent one in mid-January. So this creates a very significant multi-swing low support. Alright, so these are the key levels here for US 500, right? This is the instrument that tracks the S&P 500 futures. Alright, since we've got a little bit of time, we've still got some time, sorry, we're going to move on over to crypto. Right, move on over to crypto, and before I start the analysis on crypto, I'm just going to launch a poll as well. Really appreciate it if you guys can give your feedback with regards to today's webinar, and then we'll continue the analysis for Bitcoin as well as Ethereum. All right, great to see all the responses coming in. All right, so let's continue. All right, looking at Bitcoin, and we can see after making its latest intraday all-time high on 20th of January, that levels at 109,547. Right, this coin has faded. Right, it's pulled back quite sharply, and it looks to be consolidating around this sideways channel here. Within this sideways channel, right, I see a nice sideways channel that's been in place since the second week of February, right? It has found support at around 94,700 on the lower bound and run into resistance at around 99,600 on the upper bound here, right? So should we see Bitcoin drop towards the pivot at 91,855? This is a very significant overlap support, right? We see resistance being formed here in mid-November of last year. Then we see Bitcoin bouncing off uh, the pivot multiple times, right? We see the first swing low taking place on 26th of November, second bounce on 6th of December, third bounce on 20th of December, another bounce here on the 23rd, and in right at the end of December, another swing low in January as well, mid-January, a couple of times, right? So we can see a very significant overlap support at $91,855, which has been identified as the pivot. So if we do see Bitcoin break out of this sideways channel as identified by the white box and drop towards the pivot, this is where I think we could identify a much better opportunity to go long on Bitcoin, especially if this level holds, right? It's a very significant overlap support. If this level holds, it's quite likely we're going to see this crypto or this coin bounce higher. Now beyond the pivot, which is a significant overlap support at 91,855, right? You can see quite clearly there's nothing really that we can identify in terms of structural market support here, right? We don't see any significant overlaps, pullbacks, or swing lows, right? So the next major support beyond the pivot actually sits at 73,240, right? This is a pullback support level which was previously functioning as a multi-swing high resistance, right? We can see Bitcoin running through resistance several times since March of 2024. Right, you can see here very clearly running the resistance several times before finally breaking higher in November of last year. So what was previously a multi-swing high resistance can now potentially function as a pullback support, and that level sits at 73,240. Now this pullback support is also accompanied by a Fibonacci extension at 161%. This extension level was found by starting a retracement from this swing low on 13th of January going up to the intraday all-time high on the 20th. Right, and in terms of resistance, there's a nice swing high that was formed here in the beginning of February, and this swing high resistance is also accompanied by Fibonacci retracement at 61.8%. Right, we found a retracement running from this swing high on the 20th of Jan, going down to the swing low here on the 3rd of February. But once again, take note, Bitcoin has pretty much done nothing since the second week of February. It has traded sideways within this channel as identified by the white box. Should we see Bitcoin drop down towards the pivot at 91,855, this is where I think we can identify a much better opportunity to go long on this crypto coin here. Alright, so these are the key levels for Bitcoin. Let's move on over to Ethereum. Right, okay, as Ethereum stabilized around $2,600 in the second week of February and was sort of just consolidating around this level here. I was expecting it to rise up towards the pivot at 2,936. This is a pullback resistance that's accompanied by Fibonacci retracement at 61.8%. This retracement was found starting from this swing high on 17th of January, going down to the swing low on the 3rd of February. However, we can see Ethereum today pulling back quite sharply, right? It rose as high as $2,855 earlier today, but it has failed to reach the pivot, and instead the downside has continued as well. This looks like pretty much like a bear flag here. Let me just point this out. This looks like a pretty interesting bear flag here. Now you can see a nice bear flag being formed here, perhaps something similar to this bear flag here as well. There's another bear flag here and a couple of others along the way, right? Maybe this one here. Okay, this one's a bit too not so obvious, but yeah, there's a nice bear flag that has materialized here the third week of January, and there seems to be current one now as well. So if this lower trend line of the bear flag gives way, right, then I think we can expect Ethereum to drop much further and drop all the way down towards the first support at $2,347. This is a multi-swing low support that has been in place since 3rd of October, right? The first bounce taking place on 3rd of October, second bounce on the 10th of October, we can even argue here, third bounce taking place on 26th of October, and the final fourth bounce taking place in the first week of November. So very clearly, a very significant multi-swing low support. And should we see Ethereum break below this bear flag, right, we're quite likely to see the bearish momentum pick up, and then for any potential bearish breakout that takes place through the flag, we can identify a take profit target close to $2,400, right? This is a significant multi-swing low support that has been in place since Friday 4th of October. Right, so take note of that for Ethereum. All right, okay. As we approach the end of today's webinar, are there any further requests? Right, we still have a little bit of time, so I'll be more than happy to go through any other requests for any of the other instruments. It could be a forex pair, any other commodities or the indices. Right, if there is no further request, then let me see. I'll just pick one final instrument to wrap before we wrap things up. All right, okay, no worries. Okay, if there's no further requests, right, I'll just choose, let me see, let me take a look what else is coming up this week. Okay, we've covered the euro, we've covered the dollar index, we've covered Aussie as well. Okay, perhaps let's take a look at dollar yen, since we've also got Tokyo core CPI being released on Thursday the 27th. So let's take a look at dollar yen. Let's wrap things up. I'm taking a look at dollar yen, right? So once again, starting on the daily time frame, right, we can see that the dollar yen has stabilized at the pivot, which is at 149.28. This is a very significant overlap. It's a very significant overlap level that has been in place since 21st of October. Previously, this level functioned as a significant swing high resistance in mid-August 2024, and resistance in the first half of October 2024, and after breaking higher, it functioned as a nice support, bouncing higher. And of course, we see this very significant swing low being formed in the first week of December, thus creating a very important overlap support. And it's where the dollar yen has stabilized last Friday and today as well. So you can see the pivot and 149.28 is a very significant overlap support. And this overlap support is also accompanied by a Fibonacci extension at 161%. You can look at it here. It is a Fibonacci extension at 161%. And this extension level was found running a retracement from this swing low on 7th of February. Going up to the swing high here on the 12th. Right, so that's how the Fibonacci extension was found. Right, and beyond the pivot, which is a significant overlap support, there's another pullback support at 146.90. This level previously functioned as a swing high resistance in September 2024, and after breaking higher in October, this level is likely to function as a pullback support, and it's also accompanied by a Fibonacci projection at 100%. This projection level was found starting from 0.1, 10th of January, going down to 0.2, 7th of February, and ending at 0.3, which is the 12th. You can see 100% projection, aligning very well with the pullback support at 146.90. Now beyond that, right, I see a pretty decent pullback resistance at 151.45. Let's zoom in a little bit. Right, previously this level functioned as a nice swing low support on 7th of February. Then it functioned as support as well from Monday 17th till the 19th of February before finally giving way last Thursday. So this creates a pretty decent pullback resistance at 151.45, which we have identified as the first resistance. Right, this pullback resistance or the first resistance is also accompanied by Fibonacci retracement at 38.2%. This retracement level was found starting from this swing high on the 12th and ending with a swing low or the lowest point of the day today, Monday. And it's so we are looking at a potential rebound in the dollar yen However, we can see that this currency pair has been trading in a prolonged downtrend since mid-January, so any retracement to the upside is likely to stall at around the first resistance. So take note, right? The pivot at 149.28 is a very significant overlap support. We're expecting dollar yen to make a slight rebound, and any rebound to the upside is likely to be limited by this zone that's identified by the pullback resistance at 151.45 and the Fibonacci retracement at 38.2%. Right, and I think, let's see, is there a bearish channel that we could identify? Let me take a look. Alright, yeah, there is a case for a pretty decent bearish channel as well. And we can see a couple of touches to the upper trend line of the channel and a couple of touches to the lower trend line as well. You can see on a weekly basis. Right, let's just switch over to a weekly basis, a weekly time frame. Right, we can see very clearly dollar yen making a swing high on the first week of January, right, running as high as 158.85, but since then it's been in a prolonged downtrend where it has fallen in 1, 2, 3, 4, 5, 6, 7, about 5 out of the last 7 weeks, right, including this week, right? So a very prolonged downtrend here, and I think any retracement to the upside for dollar yen is likely to be limited at around the region that's identified by the first resistance and the 38.2% Fibonacci retracement. Right, so take note, anyone who's gone long on the dollar yen, right, especially after rebounding of the dollar yen, especially after rebounding of the pivot, which is a very significant overlap support, especially today, we've gone long on dollar yen. Take note, it's I think any rebound is likely to remain restricted, especially under 151.40. Right, so the first take profit target I would recommend would be Friday's high. Right, Friday's high sits at 150.73. This is where I would identify the first take profit target for any long position that you may have on dollar yen. And of course, if this currency pair can even breach into this resistance zone at around 151.30, this is where I would identify the second take profit target. All right, I think that's all. That's all that we've got for today. Right, thanks everyone for tuning in to today's live analysis session brought to you by IC Markets. Right, thanks everyone once again. Truly appreciate the responses, and thanks again for smashing the like button. All right, and do look out for all upcoming webinars brought to you by IC Markets for the remainder of this week. Right, we got a combination of live analysis and educational topics in English, Thai, and Bahasa. All right, thanks once again, and do look out for all upcoming webinars for the remainder of this week. All right, and I wish you all the best in your trading journey. All right, take care, everyone, and catch you all in the next session.